What's up everyone, welcome to a new market update. It's been a few days, but here we are again with a fresh new update on the markets of crypto and Bitcoin. And today we're going to discuss Bitcoin and Ethereum in a very technical way. Let's get to the charts, but before that do not forget to subscribe beneath, but also like if you enjoy the YouTube content and this video. And don't forget to comment if you want to see some special content in general. Let's get to the charts, in which we can see that Bitcoin is currently crawling upwards. There's some momentum, which means that altcoins are also getting some momentum again. And what you want to see is that Ethereum is showing some strength through the Bitcoin pair. And we'll get to that topic in a little bit. But what we can see on Bitcoin is that we're still acting inside that range. Tomorrow I'll be making a video about the Wyckoff period that everybody is focused on and some on-chain analysis of Bitcoin. But right now we can look at it in a very technical way, in which we can see that the green line around 30k is the critical support on the downside. We also know that based on the daily structure, you don't want to see the price drop beneath this entire green zone in general, because that's the range low and that's avoiding us to drop towards 24 and even 20k. However, right now you can see that the funding rates are negative for at least 10 to 12 days right now, meaning that most of you are shorting the markets right now. But I'm not sure whether you should be shorting a market that just crashed 50% because you actually want to short it in an earlier stage. So the funding rates are negative, majority is shorting. Many of you are expecting 24k and 20k to happen, which can still happen. I'm quite sure that that's still a likely chance at this stage. But given the funding rates and the sentiment, the max pain scenario seems to be to the upside rather than the downside, because majority is expecting the downside to happen, and everybody is focused whether there's a bear or bull market. So when we look at the price action at this stage, you know that I've been tweeting about a critical breaker, which is 35k. We can see that it's been acting as support relatively often in this range, and we can see that we have been rejecting that auto block quite some time already. So in order to have any further upwards momentum towards any of the range highs, we have to crack 35k in order to get there. So this is the critical breaker. If you want to sustain the upwards momentum that we currently have, you want to avoid a crash beneath 33k, beneath this entire block here. Why is that? Well, you can see that we are making higher lows and higher highs, and to keep that momentum going, you don't want to see it drop below 33k, because if that happens, or beneath this entire block, it seems very likely that we're going to crash further south and that we're going to have new lows. So what is the essence right now? One thing, if you want to become bullish or look for longs, I think you're looking around 33k to see support sustain there. And if that holds, the chances that we're going to test 35k once again seems very likely. And if we break 35k, I think we're going to continue moving towards 38, but most likely towards the range around 42k, which is also where the 21-week MA will be crawling around, or when any of the other moving averages will be crawling around. Very similar to the period that we had after the crash last year in September. If we go back in time, we can see that we had a very similar structure here in which we were acting sideways as well, and then we started to crawl back up towards the very obvious resistance zone to only reject there and come back down to continue crawling upwards and chop around for a little period of time. So that is a very likely scenario that I'm also expecting us to see happening here, in which the first stage is that we hold 33k, break 35, then we can continue making this run, act sideways, and then we get towards 49k, where probably majority will start becoming heavily bullish into the markets, but where I'll probably be downgrading my positions a little bit to be able to buy the dip once again. So we're in an accumulation phase in general. You know the critical levels on Bitcoin, and when we look at Ethereum, we can see that we're also facing critical levels. we are holding support at Ethereum, given that we have been testing this previously after the heavy crash down. We are holding a critical support zone, but you can also see that we still have a critical breaker to go through if you want to sustain the bullish momentum. And right now Ethereum is up about 27% from this low and facing resistance zone, as this entire block is very similar to Bitcoin at 35k. So you want to see this crack in general to see the upwards momentum continue, as then Ethereum is back into the range of what it was acting in previously. So this is a very important resistance zone that we should be breaking. Therefore, do not become bullish in resistance in general. If you look at it in a technical way, this is pretty much a short. If you want to hedge your position, this is probably the area that you should be doing that. And if we get back towards 33k, I wouldn't be surprised if Ethereum goes back to 1868 before it starts running upwards. Overall, if we look at this structure, not much to say, regardless of the fact that breaking through 22 opens the path to 3k. First of all 2.6, and after that I'm looking at 3k. Would I be longing Ethereum here? No, I think the chances are gone for a little, and I think what I just said, I would be looking around 1868 and maybe very aggressive around 2k if we consolidate in a manner like this. Make a very short-term consolidation. I think then 2k is the one that you should be looking at in general. If this is lost, I think we are looking at 1860 next. So if that happens, you might be opening along here and then targeting the resistance zones. But overall, if you look at it in a technical way, I think this is a small short. So if we look at where the strength is coming from, it is from Ethereum against Bitcoin. And also Ether against Bitcoin is currently acting inside resistance. But the conclusion that you can draw is that if Ethereum against Bitcoin does well, you know what follows next, which is the other altcoins. And they will start following suit, as Ethereum is a very important indicator for market strength of altcoins. And Ethereum 2.0 is continuing the momentum. So probably we'll be seeing some more hype towards Ethereum in the coming month. But we can see that we're also facing resistance levels here, as we rejected at 0.63, which pretty much is going to be the resistance zone in general still here. We are not cracking through it yet. If we do, I think we can just face yearly highs once again. What are the levels to watch for Ethereum to potentially buy the dip on? I think we are looking at 5860, so 58. We're the one that we're flipping right now, but given the structure, I think we're going to have a little bit more consolidation before we continue moving. So 5.8, I think that's the one that I'll be looking at for a potential play. If 5.8 is lost, I think we're going to lose the lows, and then I'm looking around the levels that we have here. So 5.8 I'm looking at, and whether we can flip 6.3, as when we flip 6.3, I think we have continuation heavily towards the new highs. But overall, if Ethereum against Bitcoin shows strength, you know that other altcoins will start following suit. Later this week, I'll be making an update regarding altcoins in general. Tomorrow about Bitcoin, Wyckoff and on-chain analysis. So don't forget to subscribe to this YouTube channel, and I'll see you again tomorrow.